Hi, my name's Gavin Richardson, Head of Sales here at Mortgages for Business, and I'm with Jenny Brown, our Sales Director here. So on the back of the mortgage market study, which was published on the 26th of March, we thought it was really important just to explain a little bit more about how we work in the marketplace and how we ensure that we always find the best and most appropriate product for our customers. So Jenny, probably really important now if you just explain a little bit about how we work as brokers here to make sure we always find the best deal.
Okay, so I think just to first refer back to the study and the findings, in a very brief summary, what the report was implying is that some brokers profess to be essentially whole of market brokers but aren't using the whole of the market, and the reasoning for that they believe is because brokers received a bigger financial incentive for using one lender than another. So in terms of the measures that we have in place within our business, within our home as it were, and what we do to make sure that that's not the kind of practice that goes on here. Every time a broker recommends a product to one of our clients, we have to justify it. So we need to do a suitability letter to the client explaining exactly what we've recommended and why. We're also required to report back on the spread of lenders who we're using, so that we're not just essentially just using one or two, but we have a broad mix across the whole of our business. Across the market. So the consultants are under obligation to explain the rationale behind the recommendations that they've made, and then we're also reporting both internally to our board and externally as well to the regulators to ensure that we're giving the right advice to our clients.
Okay, so in a nutshell, we're monitored, we're measured, and we report back to the FCA and have internal reporting to make sure that we don't have a bias.
Yes.
We're not focused towards one particular lender because they may, for example, pay a higher procuration fee.
Yeah.
And actually we're always giving the best advice and we can justify the advice we give.
Absolutely.
Perfect. So let's talk a little bit now about how we give that advice and how we get to the conclusion that this product might be the best one for the customer.
Yeah, so I think we would dearly love as a business for all of our clients to simply have the cheapest product or the best overall cost of product on the market for them. But the reality is that most of our clients that we come across are not necessarily difficult, but they're not always straightforward to find homes for. So really as a brokerage, the first thing that we're trying to do is always find an appropriate home, a lender that will actually lend on the deal. So as a broker, what tends to happen is we speak to the client, we find out about their situation, what it is we're looking to do. We'll then go through a process of looking at all of the lenders on the market, reducing the list of available lenders to which ones would actually be willing to provide the finance to our clients. And then there's the conversation to be had around then the pricing part of that. So pricing is almost secondary to getting a deal done in the first place and making sure that we're sending or putting our clients onto a lender who's actually going to get the deal done, because fundamentally that's the most important thing.
Absolutely, yeah. So two things for the client. We make sure we get the right product, and then we make sure the pricing fits with them.
Yes.
So how do we determine the pricing structure? What's involved in the cost of a loan?
Yeah, so as a brokerage, we do believe in looking at the true cost of borrowing. So rather than saying, well, look, this is the cheapest interest rate, what we like to do is look at the sort of broader picture. So that involves looking at, and let's just say we're going for a 5-year fixed rate. So the interest cost over a 5-year period, plus all the associated setup costs as well, and that includes valuation fees, any potential legal costs, arrangement fees, any cashbacks or other incentives that are available. So we look at all of these things bundled together, and that gives us what we regard as the true cost of borrowing over 5 years. So we tend to prefer those deals for our clients. What I would say is that some clients just want to take the cheapest interest rate. For them, cash flow is everything, so they're not interested in the overall cost of borrowing over 5 years or however long the deal is for. For them, it's just the cheapest monthly payment. And conversely to that, we also have some clients who simply will not pay large arrangement fees, even if it buys them overall the best product. Psychologically and for their own reasons, they're not willing to pay those fees. So we also work in line with what the clients are, what their requirements are as well.
Great. So it's worth probably pointing out at this point that the systems that we've got available able us to add the arrangement fee onto the loan and work out the total cost of borrowing, including adding any cost that can be added to the loan, any cost that can't be added to the loan. Also factor in.
Yes. So
we get a true cost of borrowing, including whatever interest rate and whatever fees and whatever cashback, whatever it's all put into the mix, gives us a total cost of borrowing, and that should be the most effective, cost-effective deal for the client.
Yeah, and I think also, the world's moving on a little bit in terms of clients' requirements. These days, one of the things we get asked a lot is about lenders' product transfer offerings. So some clients that we come across are willing to forego the cheapest deal, either on interest rate or 5-year cost or whatever it is that we're working on, because they're very, very focused on wanting to be with a lender who's going to allow them to remain with them by offering them a new product at the end of their deal period. So yeah, that's a sort of a new factor. The other thing that some clients are quite focused on as well, more so these days than a few years ago, is the reversion rate. So actually, if I stay with this lender and I just move off my 5-year fixed rate onto the standard rate, what does that look like as well? So there's a broader thing in terms of the overall offering of the lender that people are more focused on now.
Yeah, it really highlights, I think, in my head, the reasons why good conversations between brokers and clients are essential at the beginning of the journey, if you like, because if we don't understand the customer's plans at the beginning and at the end of the initial period, we may miss something that's quite significant. If they intend to sell the property after 2 or 5 years, and we haven't factored in early redemption charges at that point, and we've recommended a 5-year deal where their plan wants to sell after 3, or if they wanted to transfer to the next deal and that lender doesn't do a product transfer, we potentially caused additional costs maybe 2 or 5 years down the line. Which comes me to the next point of why actually paying a broker fee can actually save you quite a lot of money.
Yeah, so we do charge broker fees. So our broker fee, we charge that on receipt of a full mortgage offer. So the first thing is we're not charging people just for seeing what we can do for them. We only charge our fee once we've made good on our promise to our clients. And the benefits of paying for a broker to do the research for you, and there's so many of them, but you can take into account the fact that the broker's looking at the whole of the market on your behalf. They're saving you a lot of time. They have a better, more informed view on which lenders would lend to you based on your circumstances. We process the applications in-house. One of the things that our broker fees go towards covering is the cost of our case managers. We do a tremendous job here at getting cases over the line for our clients. There's many reasons why we do charge fees, but fundamentally, it allows us as a business to exist and offer the very good service that we offer to our clients.
Fantastic. That sums it up really nicely, Jenny. Thank you very much. So our clients, really do need to get in hold of us and talk to us. And to do that, they can give us a call on 0345 345 6788 or visit our website www.mortgagesforbusiness.co.uk. Thank you.
Thanks.